let's talk about China and what's happened. I think everybody has noticed that the Chinese have been investing in real estate all over the United States and around Europe. The Chinese have been spending a tremendous amount of dollars on luxury goods. They're investing, they pretty much own Australia and New Zealand at this point in time. And we're seeing the BAT, for those of you that don't know what BAT is, it's Baidu, Alibaba, and Tencent. They're starting to invest tremendous amounts of capital outside of China as they start to go global and international. So I'd like to actually get first of all, the panelists to introduce themselves, but then after that, I'd like to get your opinion. What do you see for China over in the short term?
Okay. I'm Jon Nieman. I'm the head of private equity for Saudi Aramco.
Alan Chang, I'm a partner at Capricorn Investment Group. We're a private investment firm managing about $5 billion for Jeff Skoll and the Skoll Foundation.
I'm Janet Devinney, and I help manage the private equity and venture capital portfolio for the Kamehameha Schools in Honolulu. We are a private nonprofit endowment with an educational mission to really help and educate K through 12 students in Hawaii. In fact, I'm very proud to actually point out one of my colleagues in the audience, Kyle DuPont, who is a proud graduate of Kamehameha Schools out of our Big Island a campus and a Stanford graduate, and is now working with Kamehameha School to help perpetuate our educational mission.
Great. Well, Jenna, to start with you, do you invest in China?
Absolutely. We're very active in China, and we're very bullish on China in certain sectors of China.
And what sectors?
In particular, the consumer internet and the new, in terms of the new economy, we continue to see, in fact, an accelerating momentum in that space.
And Alan, are you investing in China today?
Yes, so we have a multi-asset class portfolio in China today. We have not been deploying as much capital to the private capital side into China recently, but we've had exposure to China since the founding of the firm over a decade and a half ago, when the first investment in China was made into Chang, founded by Eric Lee, who went to school with Jeff.
Yes. And John?
Yes, we do as well. For Chinese dedicated funds, we have a venture capital manager that we invest with, and actually a pharma and device-focused growth fund that we've invested with as well.
And Seungha?
Yes. CreditEase is Chinese financial services firm. We invest on a global basis across private equity, hedge fund, and real estate, actively looking at for investments in the U.S. Across VC and private equity as well.
So Jenna, you mentioned that the consumer internet. I mean, we've seen one of the challenges for the venture capitalists in China is that Baidu, Alibaba, and Tencent and JD are so powerful. And you know, the question has always been for VCs, is there room for other players to come into the market in China? And what's your perspective on that?
You know, I mean, that is both a challenge and an opportunity. You know, for every incumbent, there's always an opportunity to be disrupted, right? And with the computing power becoming more and more powerful, and the ability to start companies, and the cost of starting companies coming down, I think certain areas and pockets are, I mean, there are still opportunities for young startups to disrupt the incumbents, yeah.
And Alan, what sectors particularly, I mean, are you thinking about over the next couple of years as you know, if you think about your China strategy, a lot of things have already been done. So in your view, what is next?
Yeah, I think what's next is, it's a little scary to think about. If you look at China and the evolution in the past couple of decades, what worked really well a long time ago was the copy to China strategy. Yeah. Anytime you have great business models over there that you can replicate quickly, and then you end up with, I think, last estimates of the Groupon clones, where there were several thousands of those. So I think the scary part in China is things can scale quickly is a double-edged sword. You can scale quickly, but you also have a lot of copycats showing up. On the other hand, I think the excitement is there is also the opportunity for copy from China to the Silicon Valley these days. I think some of you may know very well the latest ride-sharing opportunities. In fact, Melissa, you and I chatted about sharing economies in China and in Asia in general a few years ago. What's interesting is they're now sharing of bicycles in China. You take a cell phone out, scan a QR code, and then you can take the bike and you can drop it off anywhere. But then there are multiples of these firms that were started, and now there are mountains of these bicycles everywhere. I think there are also bicycle sharing companies that were started in the Valley recently. So that's a trend of this opportunity to copy from China, but with the concern that there's always this excess as everybody tries to scale.
Yeah.